Hello, everybody. Welcome to Zoe's Treasures. My name's Tracy, and I am here with my husband Noel. He went like this. I'm watching him. I thought I was on mute, but I guess my sound is good. Good evening, fair maiden. Hello, everybody. Welcome in. Tonight is our Friday night, just kind of open forum tax talk. So I'm going to be doing these from now through the end of tax season. Hello, hello. To answer any questions you may have, and nothing's off limits. If I can't answer it, I will tell you I can't answer it. Maybe it's something I can research and get back to you on. But most things, I've been pretty good so far. I got a pretty decent track record of being able to answer most things. So hello, Rusty Rooster. So that's where we are with this. Until I see questions, or if there are no questions, I'm going to go through the expense section of Schedule C. I have been on Friday evenings going through the Schedule C piece by piece, just to give us a little direction. But again, at any time, I'm always happy to divert and answer or try to answer any questions you may have. We have some giveaways today, which are our CEO affirmation cards and a vintage postcard. So I'm going to get those going. Hello, Olga. How are you? So with that, let's go ahead and we'll start talking a little bit about the Schedule C. But in the meantime, I will be watching for any questions. So if you have them, throw them in there. Real quick, I just remembered, before we do that, we have a new thing that we've been offering, and I rolled it out this morning. Thank you for sharing the show. I rolled it out this morning to just to kind of to whatnot in my show today, and I wanted to show you what that was, because we have a really cool product. Nobody's required to buy it. It's just something we thought was really cool that we did for ourselves, and when we did it, we're like, other people on Whatnot may want this too. So let me play a quick video and introduce you to what we are calling the live seller link, and then I'll show you what it is here on the screen.
Live seller link card. It is amazing.
Is it coming? You got it? No, almost. It's coming. My cameraman's back there having some trouble. So the live seller link, he's going to run a video so you'll get a lot better idea. But basically, it is a business card, an electronic business card for resellers. We have it in our bin right now. If you're interested, I'll pin it really quick. And this is the only thing I'm going to try to sell tonight. Just because we have it out there, I'm going to tell you guys what it is. But it is right here. So it is a one card that comes to you pre-programmed with all of your socials on there. Go ahead, play it, and then I'll talk.
Live seller link card. It is amazing. All your social
is it not
media,
playing, honey?
Your website, your selling platforms.
All right.
In one card.
Are you having a hard time playing it?
Convenient.
Yes.
All right, I'll just talk about it then. So basically, you can look at the listing itself there. It shows you a picture of it. It is a business card, and the minute, do you hear it? So I Love Discount says they can hear it, they just can't see the video. When you tap your phone to it, so it's a little card with your logo, so they're totally customized to whatever logo or custom picture that you desire. And when you go and meet somebody, you pull out this card, they tap their phone to it, and all of your socials are going to appear on their phone where they can just click and save them. So it's a high-tech way of communicating all of your information in one spot. It comes to you pre-programmed. Then you're given access to a website that you control all the information from there on out. It is really cool. And once you get it, it's totally in your control. We no longer have access to it. And you can change if your phone number changes. If you add socials, delete socials, you have total control to edit that as needed. And the card always stays updated. So those are pinned if you are interested. They are pretty cool. And again, they come completely customizable. You can get them in black or white, horizontal or vertical layout with any picture or logo that you want on there. And one of the things I was talking about this morning, yeah, absolutely SS Vintage. They're really cool. One of the things I was talking about this morning is if you're a reseller that goes to like craft fairs or markets, like you sell at those places or you have a booth, these would be really cool to put in some type of a frame and display so that when people are shopping with you, they can just tap their phones and get all of your information. So not only are you're capturing their attention at your market, but maybe you're also driving them to your Facebook and whatever other sites that you use. So thank you for your purchase. If you're purchasing them and you don't want your Whatnot logo, you want something specific picture on there, just DM us what that is. Awesome for Whatnot meetups. We need your email address too if you're purchasing it. All right. Yeah, and that's how I Love Discount says great for Whatnot meetups. So if you're going to any of those, it's a really good way because it's just a tap. We got Crystal's vintage. We got a raid, honey.
Welcome in, Raiders. Glad you can join us on this business and tax discussion.
Crystal's vintage. We always play or always take a look at our raiders' profiles when somebody raids us as a way to say thank you and let everybody know who you are. While my husband pulls that up, I can tell you a little bit about Crystal. She is an amazing seller. She sells vintage, but she is also a bookkeeper and she has great information and she does CSV training. So if you take a look at her profile, which we're going to show you, she does CSV training, which is awesome. That is your automatic uploads. There's her profile right there. Let's scroll on down and let's see when her next CSV training. Let me take this off the screen so we can actually see. There we go. Right there, CSV training 310. That's the seller support in addition to jewelry and vintage decor. The CSV training is when you upload all of your inventory from like an Excel or a CSV file into Whatnot. It is a massive time saver. If you are a pre-lister and you're not doing that, I highly suggest you go and check out her show to learn how. Tennessee Honeysuckle, congratulations. That giveaway is going to you. All right, with that was a lot of words. So let's start talking about taxes, you guys. Everybody who came in with Crystal, this is our tax show. Feel free to put tax questions in the chat at any time. So until I see questions, do you have the video now? All right, my husband wants to play the video. I see you, B. Haynes. We'll answer your question in just a second. Let's see if this video works now.
Have you seen the new live
Nope.
seller link card?
All right, 3 strikes, we're out. We won't do the video tonight. We'll work on that and get it going later. Can I count mileage when I drive places to pick up your supplies? 100% you can. Yes, you can. So mileage is applicable if you're driving it for the use of the business. There are a few exceptions. So say if you own a booth at a local antique mall, that's considered kind of like your place of employment. So from home to the booth or to the antique mall, that's not deductible. But then if you leave that antique booth and you have to go to the post office or go sourcing, all of that is deductible mileage. So you keep a log of that. Now, if you don't have a booth and you're just reselling at home, almost anywhere you go is deductible. Now, if you decide I'm going to go this way to the grocery store and then go way over here to the antique store, from your house to the grocery store for personal stuff isn't deductible. But from the grocery store to the antique store is deductible. So one of the things I always say is kind of think about your route. If the antique store is over here and you live here, is there a grocery store in between? Because just pulling off into a parking lot, that's okay. That means the whole trip becomes deductible. So a little pre-planning, a little thought about the route that you drive could make more of your miles legitimately deductible miles. And definitely keep a log of all those miles. They are worth 70 cents a mile. We're going to actually talk about that in just a minute here. So, okay. And it's not just sourcing. It's dropping off at the post office, picking up supplies. Any business purpose is deductible. Let's go ahead. Can you pull up our Schedule C for us? So we're going to go through this. Good evening, Southern Charm. But please feel free to continue to ask questions. What if I do both antique and both online selling? So Auntie Barbie, then pretty much anything you're driving is deductible. However, going to that antique booth really isn't deductible because that's like going to a place of employment. So what I would do is there a post office between you and that booth? Like, I don't know how far it is, but is there something that's more business related between you and that booth that you can stop? And that makes more of that trip deductible. Do you put giveaways as advertising? Yes, giveaways are advertising, and they are definitely an expense. We actually did a whole show this morning on giveaways, which is on, not a whole show. We talked quite a bit about giveaways and how to account for them and what the IRS says about giveaways, coupons, any type of discounts. So giveaways are definitely an expense to the business. They should be put under advertising as expense. Now, the exception to that, if you buy something just to give away, it's not part of your inventory. Like I buy vintage postcards that I use as giveaways. I buy my CEO postcards or CEO affirmation cards that are for giveaways. Those aren't inventory. That's an expense. If you have something in inventory, you have a bunch of like minis and you're like, okay, I'm going to give away one of these Wades as a giveaway, but that's actually a piece of your inventory. it's not necessarily an expense. What happens is you remove it from inventory and it gets recorded as an item sold, as a cost of goods sold. At the end of the day, it reduces your income either way. It's just a difference of what line you put it on, depending if it's an item from your inventory or if it's something that you purposely bought to give away and it's not part of your inventory. Hopefully that answers your question. All right, let's pull up that Schedule C. Okay, so we started with, hello, Blasian Bunny. We started a couple weeks ago and we went over that very top section, and that's the top section's all your basics, your name, your address. That's all the stuff that we're very familiar with. And then last week we looked at income. So that was part 1. This week we're going to zoom in a bit there. We're going to look at part 2, expenses. So can you zoom in so we can see those expense lines? All right. So what we're going to do is we're going to start at line 8, and I'm going to walk down every single line, and we're going to talk about what it is, what you can deduct, and what does that line mean to you as a reseller. And this is a really cool way. If you're not already keeping your books and you don't have a chart of accounts, using the Schedule C is a really good way to start a chart of accounts, because you can say, I'm just going to list all of my expenses in the same order that a Schedule C has them. Can you put purchases from other sellers as advertisement? So when you buy from them, it depends what you're buying them for. If you're buying them for personal use, it doesn't go as a business expense at all. If you're buying a purchase from another seller to go into your inventory because you're going to resell it, then it's an inventory. I don't see where a purchase from another seller ever would really be an advertisement. You may be able to, if you're buying a sponsorship, giveaways for advertising. Absolutely. So if you're buying a sponsorship from another seller, you probably can get away with that as being advertising. But that's the only thing I would say that you would buy from another seller that would be advertising. There may be something I'm not thinking of, but right off the top of my head, that's what's coming to mind. All right, love, go ahead and put that back. I'm sorry. Just keep it up there and throw me in the bubble if you need to. I'll concede to the bubble tonight. Okay, we'll get back to that in a little bit. I know, I'm actually telling them the bubble's okay. If I purchase PDF or other things like that, where does that go? If you purchase, so if you're spending your money to get a PDF, I would put that under other expenses like education materials. So I would just under other list education and put that there. And that's a legitimate business expense. You advancing your education in any business topic. So magazine subscriptions, online type of subscriptions. If you're, buying Newsweek daily or buying PDFs to learn how to do something, all of that is considered a legitimate business expense. So let's start up here. If you can scroll down just a little bit, our first expense line is advertising. This is an easy one. We kind of just talked about this. So first of all, let's define what the IRS says is considered an allowable deductible expense. There's 2 words that we have to keep in mind. There's really 3, but 2 big ones. Necessary and ordinary. If an expense is necessary for your business and ordinary in the course of your business, then it becomes a deductible expense. This is where people get tripped up a lot. You will hear other people say, people who are not CPAs or accountants, mind you, will say, oh, I can deduct my nails because I have my fingers on TV. I can deduct my nails, my fake nails, or I can deduct my clothes because I'm on a camera. That's not really true. It all comes back to the IRS, where you have to say, is it ordinary and necessary? And then does it fit within any other IRS guidelines? So we always look at those 2 words. You're not a hand model. So ordinary, necessary. And then the 3rd word that I don't talk about a lot, but it's documented. So anything that we have that's ordinary and necessary, we always want to make sure that it's documented. Blasian Bunny, possibly, but it's not necessary because they could still do that. We're having some side conversations here about various plastic surgeries for various types of professions. I'm going to put it in the most PC way I can. Is there a way to pay for help packing without giving the person a 1099? No, not unless they are an employee and you're paying payroll. If you pay them more than $600, you must give them a 1099 NEC. That's the only way. Now, I would never suggest doing this, but you can give them as much money as you want and you don't get the expense. You eat that expense. They don't have to claim the income. That is not legal. I would not suggest doing that, but that is what a lot of people do. And that's why you may hear about it, is because that's usually what's happening. Packing help. Yep. Okay. So if we look at that first one, advertising, we know what that is. Any advertising you pay goes on that line. The next one is car and truck expenses. Now, these get very specific, and there's actually a whole nother section that we're going to talk about next week about car and truck, but I'm going to give you high level tonight on what's deductible. We already were talking about mileage, so you still end up paying self-employment taxes if you don't give them a 1099. Yes, you do. Absolutely. Well, you're going to pay if you don't give them a 1099, you're still paying your own self-employment taxes. They probably are not paying theirs because they're not claiming the income. But either way, both of the people, the person paying them and the person receiving the money, are in the wrong. So when we look at car and truck expenses, we can take two different types of ways we can claim car and truck expenses. There's the actual, which has its own set of rules, and then there's your mileage, your standard mileage that the IRS allows. The mileage rate for last year, 2025, was 70 cents a mile. 70 cents a mile. That's a lot of money per mile, because just think about how many miles you might drive. To me, getting 70 cents a mile is more than enough motivation to make sure that I'm tracking all my mileage, because that adds up to a whole lot. Would a packer even be a 1099 employee or a W-2? So, Crystals, that's a really good question. Go ahead if you want to take it off for a second, because we're going to talk about this. Because since we're going to talk about 1099s, this is a really good question. And I did not look up all of the rules. I know a good portion of them by heart. But the IRS has very, very strict rules on 1099s versus employees. A lot of people like to try to say they're not an employee. People who are hiring other people. So the employer likes to say, oh, you're not my employee. I'm just going to 1099 you. The difference between the two. An employee is set up on payroll. You are actually issuing them a paycheck, and you're giving them, what about 3287? I'm not sure what that is. Ask your question a little bit more, G Money. I'm not sure exactly what you're saying. An employee, you're actually giving them a paycheck, and you're withholding the proper withholding taxes and FICA taxes, and then you're matching their FICA taxes, and you're submitting that to the IRS, and you're paying quarterly payroll taxes, okay? So that's an employee. A 1099 is a contract worker. You don't have to worry about any of the employment stuff. They are at will coming to work for you. They are offering some type of a service to you, and you are paying them for that service. The IRS has a very defined rules on how do you tell the difference between the two. It kind of boils down, in the most layman terms that I can explain it in, it boils down to the amount of control, direction, and mainly the control and the direction, the guidance you have over their work. If someone comes to paint your house, that's like a 1099. If you're hiring Joe Smo from down the street to come paint your house, that's like a 1099, because the only really decisions that you're making, the things that you're controlling, are, hey, I'm available during these times for you to do this job. Not that they have to be in those hours, but that's when I'm available, and I'm going to pick the color paint. But the tools he uses, how he does your paint, his processes, all of that. Yes, this is on YouTube, Sunshine Vintage. All of that is at his choice. You don't have control over all of his work. Let's put this in a whatnot scenario. If I have a packer coming in, I'm supplying the tools they're using. I'm giving them the boxes. They're doing a job in the way that I dictate. If somebody's packing for you, you probably have a process you want them to follow. I want you to log in here. I want you to do these orders first and then these orders. I want boxes packed in this manner. I'm giving you all the boxes and the packing material. I want you here between this hour and this hour, or you can come at any time, but you have to do 50 boxes before you can leave. You're controlling everything they do. That's an employee, not a 1099. So if you go to the irs.gov, you can type in contract worker, and a publication, I don't know the number off the top of my head, will pop up, and it'll actually list those rules. And they have flow charts that help you kind of walk through and decide, is this an employee or is this a contractor? You don't want to, this is the one thing that you really don't want to mess up with the IRS, because the penalties are hefty. Either way, if you err one or the other, the penalties are extremely hefty. Business liabilities change as well. Absolutely, they do. Whether you have to have unemployment insurance, certain states require it at varying levels of having employees or not. There's liabilities that you have in the business. So it really does. That is such a good point, Amber, that you make. Is a 1099 and a 1099K the same thing? 1099s, there's a bunch of different. So for contract people, it's called a 1099 NEC, non-employee compensation. The 1099Ks that we get, technically at the highest level, they are all the same thing. They're a 1099 form. They're a way for somebody paying somebody else or processing money in a certain way to report that to the taxpayer and to the IRS. The difference comes from whatever letters are behind the 1099 on when you use them. So Whatnot gives us a 1099K, but we are to give our packers or our contract people a 1099 NEC. The essence of the form is the same. It's just they have a different form name, the letters, depending on what scenario it's used under. On YouTube, same name. Yep, and I think you've already answered that. Thank you for putting that up there. Same name is here. I did not get a 1099 from Whatnot or Stripe, so I used my Whatnot year total finance. Perfect. Yes, absolutely. And you wouldn't get a 1099 unless you met the threshold. So unless you sold $20,000 in sales and had 200 transactions, Whatnot is not required to send the 1099. That's just the point where they're required. So you did exactly the right thing. That would be 100% what I would recommend, is you go and get that annual one and you match it up to your records, and that's what you use. All right, I'm going to keep watching for questions. Let's go back to our schedule, Schedule C. So we were on car and truck. So we were talking about standard mileage, 70 cents a mile. This is an easy one. But once you pick the standard mileage, you have to start from the minute you place your vehicle in service. So the minute you start business and start using that vehicle, or if you buy a new vehicle and in the year you buy it, you say, I'm going to use the standard mileage rate, you have to continue to use the standard mileage rate. The vehicle could be owned or leased. Either one is okay to use your standard mileage rate. That's probably the most common. Then you have your actual. The actual is a little more complicated, and there's a lot more rules around it. So I'm not going to dig into all the rules. It's not used as much, but that's where you're taking actual expenses of your gas and your oil changes and your tire changes and all those repairs, the maintenance, and you're getting the actual expenses. At the end of the day, the standard mileage rate, 9 out of 10 times, more than covers it and is usually far more beneficial than the actual. However, there is two methods, and I always say, if you're in the first year, you just got a vehicle, always look at the difference between the two to decide which one you want to do, because once you pick one, you got to stick with one. So you want to make sure you're picking the correct one right from the get-go. The other side of using this, where you don't have a choice, if for some reason you get to the point where you're big enough and you have a fleet of vehicles, and the IRS considers 5 vehicles in your business name a fleet of vehicles, then you can't use the standard. You have to use actual. Most of us aren't there. Most of us just have our own personal vehicle. A lot of us do not have 5 vehicles that we are using for business. So it's not something that's highly applicable to our Whatnot crowd. So that is your vehicle, your car and truck expense on line 9. I do want to talk about something that is brand new for 2025. So this IRS regulation just went into effect last year, where they are allowing no tax on the interest you pay on a new vehicle. So if you purchased a vehicle in 2025 and you financed it and you're paying interest on that loan, that interest could be tax-free up to there's limits on like how much money you're allowed to make before that phases out. So there are income limits, as with most IRS regulations. But that's definitely something you want to look into. and talk to your tax preparer about if you purchased a vehicle that you're financing during 2025, there could be a portion of that interest that you don't have to pay tax on. If that vehicle was purchased under your business name, part of that interest, the interest can go here, or if it was a vehicle that you used part personal, part business, that interest can be split between personal and business.
Welcome in, Raiders. Glad you can join us on this business and tax discussion.
Thomas, thank you so much for coming in. When we get a raid, one of the things we like to do really quick is always check out the person's profile as a way of saying thank you. Those of you coming in with Thomas, my name is Tracy. This is our tax chat show, so please stick around. And if you are a reseller, have any tax questions, throw them in the chat. And while I'm waiting for questions, we are going over the expense section of Schedule C. And there is Thomas's profile. Thank you so much. And you are another fellow PA person. Thank you for coming over. I am in PA also. Let's see what you sell and when you sell it. Football singles. Oh, you're into cards. All right, you guys, if you are into sports cards, particularly football, it looks like, now you know someone where you can check out and see what they have. Thank you so much for bringing your friends over. I appreciate that. Okay, so I think we've covered all sports. All right, not just football, you guys, all the sports. That's cool. My son has sports cards and he's always asking me questions about them. And I'm like, I don't know anything about sports cards. So now we know somebody that knows something about them. Okay. We talked about vehicle. The next line on our Schedule C is commissions and fees. So this is a little tricky one. The fees here does not reference the fees you pay whatnot. I would not put those fees on this line. This is more commissions that you pay to somebody. Probably not very applicable to whatnot people. This isn't a line I'm going to see us paying, using a lot. However, if you're selling stuff on consignment, possibly you're paying commissions to somebody, it would go here. Keep in mind, we were just talking about 1099s. If there is a number on this line over $600 on line 10, the IRS is also expecting that you have filed a 1099 with that. When you pay somebody commissions, it also triggers the requirement for a 1099. So really think through before you put something here, because if you put a number on line 10 and you don't file those 1099s, that is something the IRS computers will match up, and you could be questioned on that because they're expecting that if you've paid commissions, that's a type of expense that you're paying somebody that should be reported on also the 1099s. So that's commissions and fees. Again, it's not something that is going to be super common for our whatnot people. The next line is contract labor. This follows the same rules. So this goes to what we were talking about. If I'm paying somebody to do a job that is contract and that's not an employee, this is where I would put it. I would put all the expense I had under contract labor right there on line 11. Again, though, this is also a triggering 1099 field. So if that number is greater than 600, the IRS is going to be also looking for a corresponding 1099 to go along with it. So you want to think through that. If you're putting a number there, make sure you're also meeting all the other filing requirements. The next line is depletion. I racked my brain and could not think of an example for depletion that would happen with whatnot. It's $600 for a 1099 NEC. The non-employee compensation for the commissions or the contract labor is $600. A 1099K for us that whatnot gives us is $20,000. So it depends on the type of 1099 on what that triggering dollar amount is. So when we look at depletion, again, I couldn't think of anything whatnot related on here, so it's probably not one you're going to use. But what this refers to is depletion of natural resources, timber, wood, oil. So any of like the, what are they called? The quarries? Is that, I can never say that word. So it's depletion of a natural resource. Again, probably not common for whatnot, but at least now you know what that line is. So you're probably going to skip it in most instances. The next one is depreciation in Section 179 expense. So depreciation, I actually have What if I cut down my trees to make a box puncher material? Still, no, that still doesn't count because you're not technically in the business of cutting down your trees. That's not really, we're going to go back to ordinary or necessary for your business. But it's a good try. Good. I applaud the creative thinking there. I love discounts. Okay. Where were depreciation? I actually have the Friday before last, a week ago Friday, I talked a lot about depreciation in Section 179. So if you want a lot more information than I'm going to give right now, that's a good show to go on YouTube and watch. That was my Friday show, again, a week ago. Basically what depreciation is, when you buy a piece of equipment that has a lifespan of greater than a year and usually cost over $2,500, we're just going to use that as kind of a standard number. You don't get to expense that all in 1 year. You don't get to say, oh, I bought this fancy computer for $3,000. That's all tax-free money. I'm taking all of that off my tax return. Generally, you don't get to do that. What you have to do is you have to say, okay, a computer has a lifespan of 3 to 5 years. I'm going to assign 5 years to this computer, and I'm going to take 1/5 of that $3,000 each year to correspond to the life of the computer. That's depreciation. So that is for assets that have a lifespan of longer than a year and cost over, we're using a number of $2,500. That number is not set in stone. That can vary business by business. You have to pick a number that's reasonable. The IRS has a safe harbor of $2,500, which basically means if you use $2,500, you're pretty much not going to be questioned about it. That's why I pick that number in my examples. Anything less, if you buy a computer for $800, you can expense it. Doesn't even go on this line. You're fine. Don't have to worry about it. Now, the other side of this, it says depreciation and Section 179. You may hear this term frequently during tax season, or somebody who's not that experienced may say, oh, my accountant told me to Section 179 it. This is common language. You hear people use Section 179 as a verb to do something. What this is a special rule by the IRS that says, you bought that $3,000 computer. You're supposed to depreciate it over its lifespan, but we have some special rules where we're going to allow you to take all of that in the first year instead of over the course of its life. So it's kind of the out to depreciation. This is a way that tax professionals will use tax planning, and it's not a loophole, but legitimate rules and regulations to come to different tax conclusions, and maybe ones that are more favorable to you based on the bigger picture and what's happening this year and next year in your tax situation. So that's what Section 179 is. Not something I would suggest just doing on the fly on your own. If you have significant equipment expenses, I would consider that a reason to talk to a tax professional, even if it's just to get advice and not having them do your tax return, if you're in that type of a situation. So that's what those lines are. Then we go down to line 14, which is employee benefit programs. The key word on line 14 is employee. This means that you actually have to have employees to take employee benefit program expenses. That means payroll, right? W-2 people. So if you don't have employees, this probably isn't going to apply to you unless you are paying yourself payroll. You can be your own employee. It would apply then. Or we're talking about dependent care assistant programs. What if you had a fleet of vehicles? Would that go under depreciation or vehicle expense, or both? It goes under both because you have to depreciate if you're purchasing those vehicles. Those are assets. So a portion of the cost of the vehicle is depreciated, and then your use of the vehicle, the actual expense to operate the vehicle, goes under those vehicle expenses. So you are correct on both because there's two different things happening with a vehicle. Okay. The one thing on employee benefit programs I want to point out, if you are self-employed, meaning I'm paying myself a payroll, I can qualify here. What may qualify here are dependent care assistant programs. Again, this is a little advanced for Whatnot people. However, if you are full-time Whatnot and you're making some decent money, you very well may have set some of these things up because you're working with a really good tax planner and financial advisor. A dependent care assistant program is the same thing that you would get through a W-2 at work. Some people's works offer help for paying for childcare or elderly care. It's that type of a system, but you actually have to set that up, and it has to be there's like a legal way to set those things up that you have to work through a financial advisor. Enrolling my kids in childcare now. Let's talk I Love Discounts before you do that. Hello, Lentro. Yes, thank God it's ready. Some of the other things that would qualify for employees, if you are actually paying employees under this line, would be accident and health plans. So if you actually have employees and you have some type of health insurance plan for them, it would go on this line. Or term life insurance would go on this line. But those two things do not qualify if you're the only employee in the business. So there's some really technical rules around this line. This is one that if you are at the point of having employees, you definitely want to talk to a tax advisor. I'm not going to spend much more time on that because it's not super common for most of us on Whatnot to be in that situation. And if you are, you probably already have a tax advisor. So next line is insurance. No, always ask questions. Do we need to be an LLC to pay our kids to work for us? I hear this loophole a lot. You do not need to be an LLC. There are special rules that your children can work for you legitimately, and you can pay them tax-free for working for you. And when I say tax-free, I mean you don't have to pay, withholding. You don't have to withhold federal employment tax and pay them as an employee. So children under the age of 18 that work for you are allowed to make up to the standard deduction amount without you withholding taxes, and they don't have to file taxes on that income, and you can legitimately deduct that. The way I do that, and you do not need to 1099 them either. Nope. The way I do that is my daughter works in the business. I have certain things on Etsy that she's responsible for. She has to maintain it, pack it, do the customer service. So not only is she learning some good business skills, but she's helping me out. She also does miscellaneous other things for my Whatnot business. And then what I pay for all of her cheer activities, I consider her money that she earns, and that becomes a deductible expense on my tax return. It is a very legitimate strategy and allowed within a Schedule C.
The only one doesn't get paid is me.
Yeah, I don't pay the husband. You're very welcome. You could ask me at any time. My oldest prints for me a lot. There you go. So there's legitimate ways to, and this is where taxes get fun. I know you guys are rolling your eyes. You're like, Tracy, this is fun. This is where it gets interesting. There are legitimate ways. I love discounts. You're going to make me blush. There are legitimate ways to reduce your taxable income. And it's not like loopholes or anything. It's like legal ways. I'm going to go back to, I say this at every tax show. At January 1st, we start like this. Our income is zero, right? Your accounting income, your tax income. Throughout the year, we want our profit to be up and up and up and up, right? We want our profit way up here. We want to make all the money. But when it comes to taxes, we don't want all the profit. We want that tax way down here. We only want to show a little bit of profit so that we only pay a little bit of tax, right? The only way to keep this going down legitimately is to use some of these strategies to your advantage. What can I do legally? Can I pay a child legally? Can I set up some type of an IRA or a retirement plan for myself? What can I do that's beneficial to me, that I have money to do, but also reduces my taxable income? And it actually does become really exciting to see how much money you can save and not pay the government in a legal manner. And if you get a good tax person, they will absolutely 100% work with you and identify all those possibilities. And even if they're not possibilities this year, they will help you figure out how to put a plan in place to make it better for you, particularly as your Whatnot business grows and you're making more money. Okay. All right, let's go back to Schedule C. So I think we left off on insurance. So this is any insurance you pay in your business other than health insurance. So if you have a warehouse or you have a storage shed that you're insuring, you're paying, hey, I keep all my inventory in there. I'm going to keep a liability, or not a liability, what is it? A protection policy in case a hurricane comes through and wipes out all my inventory. Any type of insurance that you pay that is legitimately insuring business assets can be deducted here on this line. Insurance kills. It's very expensive. So thank goodness we have a way to get some benefit out of it, right? Because we all know we pay insurance and very little do we usually get back. You cannot, are we on insurance? Oh, interest. Okay. So that's insurance. Interest, I can't speak. Interest is next. So interest is very, very particular with the IRS. There are a lot of rules, more than I would be able to explain here. There is a publication, IRS publication 225. If you have interest, anything other than what I'm about to explain, you're going to get into a more highly regulated, more rule in-depth scenario that's over and above the scope of what we're talking about. But this line in general, if you have a credit card or a bank loan that is solely used for the business, and that is key, solely used for the business, the interest on that credit card or the interest on that loan could be deductible here. This is where you would put it. Any interest over and above that, you have to speak to a tax professional because it is very, very rule heavy. Our warehouse required a $2 million insurance policy. Oh my goodness. The store's insurance policy is higher because it doesn't have fire support. Well, yeah, because if it's not going to put out the fire, there's more risk. Makes sense. See, that insurance is crazy expensive. Wow. You cannot on here deduct your home mortgage interest on here. I know a lot of times we're going to talk about a home office expense, and there is legitimate ways to do your home office, but the interest you pay on your mortgage is personal. It does not go there. What about food would be left with water? Well, yeah, there'd be no, yeah, I mean, it doesn't make sense, but like your canned goods may survive. Your labels, it'd be mystery cans at that point, but your canned goods may still survive. Stuff inside a freezer may still be good, but anything in a box would be garbage. I kind of like the whole mystery can idea. You can create a whole business of mystery cans of food. I know, bad business idea. I'm joking. All right. It's not allowed in Kentucky. Really? Well, that's interesting. Okay. What's next? Mortgage paid to banks and others. So that's under interest. The next line, legal and professional service. This is one that a lot of resellers miss. Okay. This is an expense that a lot of people just overlook because they don't consider it. Anytime you pay your CPA, your tax attorney, legal advisor, any of these people you pay, if you need to go and meet with them for an hour and they charge you to get advice, that's the deductible business expense. And that goes on line 17. The person you pay to do your taxes goes on line 17. So if you go to H&R Block and they're doing your business taxes, which your Schedule C is your business tax, you can deduct the expense of that. This is one of those ones that a lot of people miss. So definitely take note that you can put the expense that you pay for your taxes right there. When did the PDFs you buy be included in professional fees? No, I would put those in education materials. I wouldn't put them in professional. Professional fees are usually money that you are paying for expert advice or service. The PDF is more I'm buying that to learn something. So to me, it's educational. I wouldn't put those under professional. Now, you put a $5 PDF under professional fees. Is the IRS really going to care? Probably not. That's not something that's going to come back and bite you and cost you a lot of money. So don't stress on it. But I still wouldn't put it there. But if you did, it's not anything to worry about. Okay, next line. We're working our way through. So we are over on column 2 now, line 18. So we're going to scoot over. They get you a lot of expenses that you can take care. So 18 is office expenses. This is all the stuff that you have, paper that you buy, ink for your printer, any office expense, anything you buy to labels, anything you buy to run the office, tape that you're putting in your masking tape. Now, some of this you may say, oh, maybe some of that's shipping supplies. It's a dime a dozen. You can kind of pick here. It really doesn't matter. But basically anything you buy to run an office, to run your whatnot back end stuff goes here. Stickers from Natural State of High, 100%. If you are buying stickers from Natural State of High, that is a business expense and a very good reason to go and buy stickers from Natural State of High. Okay. So you need to do a whole marketing thing around that. You really do, like a whole like deductible stickers. Here you go. Okay, the next one, pension and profit sharing plans. Now, this may not affect a lot of people, but I really want to tell you about it because if you have any aspirations of going full-time with Whatnot, or if you are already full-time and do not do this, this may be something you want to consider. So pension and profit sharing plans are deductible. What am I talking about here? SEPs, Simples, SARSEPs, so like a simple IRA or a SEP. These are all self-employed pension plans. A simple IRA is a certain type of an IRA for self-employed people. A SARSEP is kind of a combination of those two. These are all retirement plans. A lot of times you're going to hear a 401k, right? A 401k is if you work for somebody else, they have this retirement plan, you put money in every paycheck, usually they'll match a little bit. That's wonderful. But if you're not working for somebody else, owner only 401k. So yeah, there's a lot of different things that fall into this. The key here is they have to be legally set up by a financial advisor or an attorney of some sort that are allowed to set these up. They're very intricate to set up. They can be quite costly on the front end. When I say costly, I'm talking a couple $1,000s usually to set up. However, as a business owner, particularly if you are not saving in any other manner and you're thinking about going full-time or you are there, you should always be considering, what am I doing for retirement? Do you want to be 75 years old slinging boxes to the back of your truck and hauling them down to the post office? Probably not. At 75, you probably want to be drawing money out of a bank sitting on a beach in Aruba. Okay? That's not possible if you don't plan for it and make it happen. And you can't start when you're 60. You need to start back as soon as you possibly can. When you are not working for somebody else who has this plan in place, it is up to you to put one of these plans in place. And so this is where establishing a plan, it's deductible, it's an expense to the business. You can establish them as a sole proprietor or as a self-employed person. 100% legit to be able to put them here. I do want to go to Aruba with you. So I'm going to count on your retirement plan though, because my retirement plan is, I'm not spending it. Well, I'm not going to spend it till I'm almost dead.
Let's go kayaking.
There's a lot more to this. I'm not going to keep going really in depth because if you have one of these plans in place, there's also another legal requirement to file another tax return for the plan. So yes, the plans have tax returns also. They're called 5500s. If you're ever at a point where you have one of these plans, whoever set the plan up hooks you up with somebody to help you file those returns. It's a complicated thing, but again, if you're at the stage of having one of these plans, you are working with a financial advisor or like a tax attorney. So the money you invest in the plan is deductible. Correct. So when you're putting that money in there, it's coming out of your business profits, or it's coming as an expense. So the money you put in, you're putting it in tax-free. You earn all this money from Whatnot and all your activities, and then you're going to take some of that money and invest it into this retirement plan. You're never taxed on that money at the point of earning it. It's tax-free money you're setting aside. Then when you get to retirement age, it follows the tax laws at retirement of when and how much you're allowed to pull out, or how much. There's certain rules about having to do mandatory amounts at a certain age. So, and the fees you pay to have that set up, yes, the fees you pay to have that set up are also deductible. So that few $1,000s you're going to pay to set that up is deductible. This is another tax strategy. We all have to plan for our retirement somehow. And if you don't already work for somebody who's helping you do that, who has a plan already set up, this is a way for you to do it and to save a lot of money right now on your taxes. And you're doing, so think about this. You've got to think about taxes in this way, okay? Taxes and retirement. This is one of those things that a lot of people don't consider. Because a lot of us, at least the ones in my age, our parents, when they were working, they had pensions. Pensions aren't as common anymore unless you're working usually like in a government type position, or some, like maybe Ford Motor Company, some of these really, really old companies may still have some pension employees, but they're not as common. Some unions may have pensions. What's come now is the 401ks, the IRAs, the SEPs. And the reason why these make sense, My dad is moving with me right now because he can't afford to live by himself. Oh yeah, it definitely. Seeing what happens as you age really makes you start thinking, what's going to happen when I get there? So the reason why these are such a good idea, and I am not a financial advisor, I'm a CPA. They are two completely different backgrounds and educations and experience. So I'm giving you a very high level. I do totally recommend you speak with a financial advisor. But as we're earning, you're in your 30s, your 40s, your 50s. You're progressing. If you work for somebody else, you're progressing in your career. You're usually making your highest income. 40 to 60 somewhere is usually your highest earning potential. That's when, if you look at all your W-2s, you're making the most of your money, right? Because in your 20s and 30s, you're climbing that ladder, okay? 40s, 50s, 60s, you're making all that bulk of your money. Well, while you're making the bulk of that money, you're putting as much away tax-free as you can. So I'm making a lot of money, but here's a legal way for me to pay less tax. So I'm putting that money away, right? Then when you get to retirement age, you don't have that income anymore. You're making a lot less money. So you're pulling out the money now at a lower tax bracket. So what you are ultimately doing is taking money when you're at a high tax bracket and deferring it to when you're more typically at a lower tax bracket. So not only do you get tax-free money when you're putting it away, you pay less tax on it when you pull it out. That's kind of the very, very high level beauty of these plans and saving for retirement. So that's, I know it's a lot kind of diverted, but I had to go there because it's not something a lot of people think of. Devil's advocate here. Elon Musk talks about putting away money is fruitless because universal income is inevitable with AI. Good for Elon Musk. I'm not counting on that. I'm just not. I'm a firm believer in putting away my own money and saving. And I'm not getting political here. I don't like talking politics, but I believe in taking care of myself, and my money is my money. I'm not going to rely on the government, hopefully funding my retirement, or the government taking care of me in old age. There's too much risk in that for me to be comfortable. For me, I want to make sure that I'm taken care of, so I'm going to make sure I provide that for myself. Yes, not agree with it or not. Yeah, I've heard that too. And again, everybody has to do what they're comfortable with. So I think the retirement accounts, I've told all of my kids, my adult children, the minute they started working, to put money away. So it's something that I will always push for, because you would be amazed at how fast you can actually accumulate money in some of these plans and how fast they grow. So, okay, let's go back to our Schedule C. Oh, lifestyle. Okay, did you get the video to work finally? Are we going to try? Should I give him another chance? Okay, if you guys are just joining or you didn't see it before, we're going to give my husband one more chance. We are selling these really cool things called the Live Seller Link. Let's see if his video finally works. I'm not going to give you another chance. I love you. Oh, there you go.
Have you seen the new Live Seller Link card? It is amazing. All your social media, your website, your selling platforms in one card? How convenient.
Share your seller profile, social media, and contact info, all with one tap.
All right, so that's the Live Seller Link that we're selling. It is in the bin if you're interested. It does come fully customizable with any logo you want or any picture you want, and it comes pre-programmed to you. And then after that, it is fully in your control to check out, customize it in any way you want as far as your socials or your contact information. Okay, let's go back to our Schedule C. And those cards are deductible. I would put those on supplies. Thank you for asking. That's a good question. Okay, we are on line 20, I think we're on line 20, rent or lease. So if you rent or lease, you could go on advertising. I would say it's more of a supply. It's like a business card. I would put business cards on supplies. You could do advertising. It's not a hard and fast rule. Okay, I am getting outvoted. We will go advertising. It's one or the other. It's okay. Either one works. Let's talk about renting or leasing. If you are renting or leasing equipment, are building a space, a storage unit for your business, the cost of that's deductible. I have a storage unit. It's not for business, but if it was, I would be able to deduct my $79 a month that I pay for it here on this line. So if you need a place, is Social Security tax free yet? No, it is not. There's a certain portion that is tax free, but then it becomes a point where your income reduces it, so it's not totally tax free. There's a certain portion that is, but there is a portion that is still taxable. I just totally lost my train of thought. Rent or lease. So if you're renting, if you have a storage unit, you don't have enough space in your house, you've got to rent a spot to keep all of your inventory or keep backlog inventory. That's totally deductible. If you rent a spot that you do your filming in, you do your whatnot videos, that's deductible. If you rent equipment, if you go and rent some high, really cool, fancy camera to run your whatnot shows, if that's ordinary and necessary for you and your business, the rental of that equipment could be deductible here on this line. So any equipment or space that you are renting goes here. The next line is repairs and maintenance. This one is a tad bit tricky. Repairs and maintenance have to truly be a repair and maintenance. Earlier, we talked about depreciable equipment. So that's when you buy equipment that has a lifespan of over a year and costs usually over $2,500. If you repair that equipment, you make a repair. You buy a fancy computer and the screen cracks and all you have to do is fix the screen. That's a repair. But if you replace the motherboard on that computer, that's not a repair. That's replacing the whole computer because that's the core of the computer. So you really have to be careful. Are you repairing it? Are you replacing? You could only deduct the repairs here. The replacement becomes, again, depreciable and not deductible under expenses. So I can't get the gutters repaired on my house as a business expense. No, you cannot. That would be a hard no. You're trying, keep trying though. Pretty soon I love discounts. Again, bonus points for creativity here. Okay, so repairs and maintenance. The next one is supplies. This is anything you didn't include in part 3. Basically any other supplies, shipping supplies, anything, labels to print shipping, your shipping labels on. These are any other supplies that you have bought to operate your business goes right there. Where would I show the cost of my storage cabinet? Show supplies, laptop, and things like ring light too. Okay, so storage cabinet would depend on the price you paid for it. If it's over $2,500, that would be a depreciable asset. So that becomes an asset and the depreciation goes back there on line 13. If it's less than $2,500, that would just be an expense. And I would put that under supplies, or you can also list it under other expenses, line 27B. Show supplies is supplies, so the line we were just talking about. Laptop, again, the laptop, depending on the price and how long it lasts, would the same thing as the cabinet. Ring light, all of that would be under supplies. Those are things you need to do your job, right? After this show, you're going to, I will not ban you. You make them fun. I love discounts. Line 18 and 22. Okay, so let's go to line 18 is our office supplies. Yes. So office expense. So one of the things you have to understand about taxes, there's a ton of rules, right? We all know the tax code is, this thick. But there's also a ton of gray area that's open for your interpretation. Just like some people said they would put business cards under advertising, I would put business cards under office expense. It's okay either way. So the difference between line 18 is more your office expenses. Are you buying paper, reams of paper? That's not really a shipping supply. It's more of something to keep your office running, to keep necessary things happening in your business. Toner, ink for your your printer. Those type of supplies that aren't really shipping. They're not really, it's definitely not something you're selling. So office type supplies go under 18. Supplies on 22, we're thinking shipping supplies, all these other supplies that we need to operate, not to support the business, but to actually continue the revenue producing production. Okay. And again, it's a gray area. Ring light, I would throw ring light under supplies. I use my ring light in a show in revenue producing activity. Whereas paper, a ream of paper, I don't really use a ream of paper per se in a revenue producing way. I use it as supporting other activities. Does that make sense? Okay. I'm glad that helps. So that's probably the easiest way I can think of to look at it. Am I using a supply in a revenue producing way? And shipping is part of your revenue producing, right? Because you have to ship what you sell. And then you have stuff that's more just back end. It helps keep the business going, but it's not helping you generate that money. Okay. What about blank sticker rolls for me before printing? That, I would put that into cost of goods sold, actually, natural state of high. Because yours is almost this unique thing because you're selling a finished product, but you're really like a handmade item. You're taking something and adding to it to create something you sell. So it would be, to me, I look at your stickers as somebody who paints buying a canvas. So you're just putting ink on it in a different manner. They're putting paint on a canvas. You're putting ink on a sticker. Essentially, it's the same thing. It's the same concept. So that goes into cost of goods. That is the cost of what you're selling. Okay. All right, let's see. What is our next line? We were on supplies, taxes, and licenses. So this one's a little particular also. Taxes is and licenses, anything that you pay for the business. Make sure anything we're talking about here is business only, never anything personal. It's always business. Some of the taxes that would apply here, I actually wrote a list because I went to the IRS publication and copied some of this list down because it was important. State and local sales tax, but you also must include that in income. So if Whatnot handles our sales tax for us, we don't have to worry about it. However, if you are a reseller, in certain circumstances, when you're not on a platform, there may be the instance where you're handling your own sales tax. If you include it in your income, then you can deduct it down here because it's really a pass-through. People pay you sales tax, you pay it to the state. So in those instances where you're handling sales tax, again, Whatnot, eBay, they do it for us. It doesn't count there. But there's some resellers that do certain booths, certain when you go to markets, if you're selling at a flea market or someplace where you're charging sales tax, you're responsible to remit that tax to the state. So when you include it in your income, you back it back out here on this line. Yes, filing by the quarter absolutely sucks. It does. It's just a whole nother tax return you got to file. So that's state and local sales tax, real estate tax, and personal property taxes if they're owned in the business. So there are some states that charge what's called an intangible tax. So what an intangible tax, I know Florida, Mississippi charges these. Alabama, I think may, I'm not 100% sure in Alabama, is you have to file what's called an intangible tax return. So you tell your state all of the, tangible, not intangible, tangible tax return. You tell your state about all the equipment your business owns, and then they charge you tax on that every year. That's a tangible tax return. That's deductible here. Well, thank you for being here. I appreciate it. Licensing and fees. If you have to pay any type of licensing and fees, here goes back to the LLC question. In order to have an LLC, most states you have to do you pay a fee annually. You have to renew that LLC license every year with your state. That's a fee. That's deductible here on this line. If you have employees and you're paying their payroll taxes, it would go here on this line. Unemployment tax, highway use tax, if you're in a business that you have to pay highway use tax. Those are all types of taxes or fees that you would put on this line. Some of those could very well apply to Whatnot people. So this is one definitely you want to know about. Taxes, fees for food producing and cottage food industries. Taxes and fees for food producing. I'm not sure what you're asking. I love discounts or saying to me. Clarify that for me because I'm not sure. What doesn't go here? What does not get included on this line? Federal income tax. What you pay, if you did your taxes last year and you owed the federal government money on your tax return, it's not deductible here. That's personal. You owe that in a personal manner because this flows through to your personal return. That's not deductible. County health, thank you. Yes. So if you're in a food producing business, you have to pay fees to the county health department. Perfect example of fees that you would have to pay. Thank you. I wasn't sure what you were saying at first. But yes, that is a really good. Interstate fees for food going across state lines. There you go. These are all deductible here on that line. You cannot deduct estate or gift tax. Anything that's personal, your federal tax returns, estate or gift tax, personal tax, all of that does not go here. That goes on your personal tax return, 1040, Schedule A, not here. Okay, travel and meals. This is where it gets a little bit interesting. And this is where it gets very misunderstood. You will hear people say, and I actually have heard another person on this platform say this in their chat shows. Well, I take my whole family on vacation and it's free. I just write it all off because we go on business trips. I hope this person doesn't get audited because they are in for a world of hurt if they get audited because of that. You travel for your business is totally deductible. This is where we go to Epcot and Disney and have, yes, we have to make it a legitimate meeting and everybody has to be employees of that business, not employees, but has to be part of the business. If I travel for whatnot, let's use a perfect example. My husband and I are going to the Seller Summit in Austin, okay? My husband and I both operate this business together. Our plane fare there, our hotel there, our fee to get into the summit is all deductible, okay? If, though, I am going somewhere else, let's say for my 9-to-5 job, okay, because a business is a business, whether I own it or not, a business is a business. If I am on my 9-to-5 job, it will be on YouTube, Kimmy, same name, Zoe's Treasures. On my 9-to-5, if I go travel, which I do at least 1 week a month, next week I'm going to Dallas. I'm going to a conference in Dallas for my 9-to-5 job. All of my travel is deductible because that is legitimate business expense. If I were to take my husband to go to Dallas next week for my other job, his travel is not deductible because he doesn't participate in that job. The same goes to your business on whatnot. If your husband or spouse actively participates in your business, their travel would be deductible. Your children's travel is not. And this is where we said earlier, oh, you can pay your kids and you can get some tax-free money by paying your kids, right? That doesn't make them necessarily deductible when you're traveling. So just because they're on your return in that manner doesn't mean that their presence on that business trip was ordinary or necessary, okay? So while my daughter works in our business, there is no reason for her to go to a seller summit in Austin, a whatnot seller summit. Me and my husband, completely legitimate, ordinary, necessary to go to a seller summit in Austin, totally deductible. If my daughter were to come with me, I could not deduct her airfare or any of the food that she would consume, right? The hotel's already paid for by us. That's a freebie, thrown in for her. But her airfare would not be deductible. So there is quite a vast difference. It needs to be ordinary, necessary, and for business purposes. If you go to Austin for a meetup, is the campground fee, food, and travel expenses? The campground fee, yes, because that's just like you're paying for a hotel. It's a different type of lodging. Your travel expenses, yes, either your mileage, you're either keeping your mileage if you're driving, or that plane ticket, a rental car. All of that is deductible. The gas you put in the rental car. When you're renting a vehicle, like a temporary for like a few day use, that doesn't apply to the vehicle that we were talking about earlier. That goes here under travel. Your food, we're about to get to that. Food is a little bit different, okay? So most of the trip is 100% deductible for business purposes. What's not included for travel before we talk about food is international travel. And you know why the IRS put these rules in place is because somebody took advantage of it at one point and they're like, we ain't having that anymore. Now we got to make a rule, right? Oh, wait, we're going to get there. I love discounts. So international travel is not deductible unless it is, and I'm quoting the IRS here, international travel unless directly related to your trade or business and is reasonable for the meeting to be held outside of the country. This means that because I want to go to Scotland, I cannot say, I'm going to Scotland to source really cool Scottish stuff and bring back to sell on whatnot, so I'm going to make my whole trip deductible. That's a no-go. The IRS is going to be like, get out of here with that BS, right? Not deductible. Now, I'll give you an example when something in international travel is deductible. My 9-to-5 job, we have headquarters, I know, it should be, right? My 9-to-5 job, we have headquarters in Belgium. When I go to Belgium, That is completely a legitimate deductible business expense, even though it's international travel for my 9 to 5 job, because that's where our company headquarters is. That makes sense, right? But as a whatnot seller, here's another example. We frequently go to Mexico, we try to go at least once a year. I source when I'm in Mexico. That's another country, okay? Even though you can drive across the border, sometimes it doesn't feel like it is. That's another country. That's international travel. That's not deductible just because I'm sourcing there, because the sourcing is secondary. It's not really a business trip. It's not ordinary necessary for me to source there. No. Even if you go to see Thriftworks, that is not ordinary. There's really no true business essence there. You're creating some excuse to make it business, but it's not really business. So the IRS is very, very picky on this. Some of you are probably sitting there going, I'm never going to travel internationally. I don't have plans this year or next year. Move on. I just want to make the point because this is a highly misinterpreted and abused rule when it comes to the IRS. Okay, let's get to meals. Zoe's treasure. So that's why we had a podcast meeting smack dab in the middle of all you can eat at the Brazilian meat house. That's right. We had to make our trip to the Brazilian meat place deductible. Let's talk about food. Now that we're on Brazilian steakhouses, let's talk about food. Meals while traveling away from home. When you go to a seller summit, a whatnot meetup, you go on a 3-day sourcing trip, following that big long garage sale that they have or the yard sale thing. Meals away from home are deductible up to 50% of the meal. Follows the same rules that I just talked about. It has to be for a business purpose, you and your spouse, not your kids, that type of thing. 50%, that's all that's allowed. And quoting the IRS again, ordinary and necessary, those 2 words, not lavish or extravagant. That does not mean that I can go and eat filet mignon every single night. It doesn't say that you can't have a nice meal. They're not limiting you to McDonald's every night, but within reason. I went to a Gordon Ramsay restaurant one time, and there was 3 of us, and it cost almost $900 to eat one meal for dinner. That's lavish. That's extraordinary, right? Is that something you would normally do? Okay. If you only go to the Gordon Ramsay restaurant and spend $900 on a meal when you're doing business, but never do it at any other time in your life, is that normal? Now, if you regularly eat at restaurants like that and that is your income level and that's your norm, that could be your norm in your business and be deductible. So you see that gray area. It's all in context, and you've got to look at the larger picture. How about beef ribs the size of your head? That would be really good. I probably only eat one though. Okay. And here's the other weird rule the IRS had to put in there. You have to be present at the meal. I have to be at that meal in order to claim it. Again, you know why they put this rule in? Because some idiot claimed a bunch of meals that they never showed up at as deductible expenses. That's what happened. That's how rules end up getting put into place. Okay. Now, if you want to say that sounds like a lot of trouble for 50% on my meals, I don't want to track it. I don't want to keep track of it. There's a per diem. The IRS allows you a set dollar amount. It changes by locality. There's a bunch of different amounts. If you go to California, it's different than if you go to Mississippi. So there's a publication 463 that outlines all the different things, and it is a standard allowance per day or per meal that the IRS is like, I don't care what you eat. I'm going to give you X number of dollars. There you go. I don't even care if you have a receipt. You just get to have this money. That's like an out. That's an easy way to take advantage of it. All right, let's go back. I think we're almost done with Schedule C. That's travel and meals. That was a lot. Random question. When I start keeping track of my expenses, do I include tax I paid on the purchases for each entry? Absolutely. That tax is part of your cost of goods. So I'm assuming that you're talking about your inventory. If you're talking about things you're going to buy to resell, that tax becomes part of your cost of goods. If you're talking about tax you pay because you went to the office supply store and bought some pens and paper and stuff like that, that's still an expense to you. So that just goes in with your supplies, your office supplies, wherever you're recording that. Oh, Busy Bee. Well, ask away. I'm here. We're just working our way through Schedule C. We have a few more lines. All right. So we talked about travel, meals, utilities. If you have to pay any type of utility, that is deductible. And this, again, would be legitimate for your business. I'm going to use I Love Discounts as an example. They run a business. They have a grocery store and a warehouse. They have to keep lights on and heat and all the utilities, internet, and all of that in those buildings that are their revenue producing workspaces. Those are all deductible under utilities. And then wages. If you have employees and you're paying wages, or you are self-employed and paying yourself a payroll, legit payroll where you're withholding taxes, those wages go here. That's your payroll. And then I'm not going to go into energy efficient commercial building deduction. This is super specific. If you own a building, if you own a large warehouse, there are special rules here. That I would say seek a tax advisor. It is not something, I don't think I have ever, in all the tax work I have ever done, actually ever put anything on that line. This is more of an exception. So I'm not going to dig into it here. If you own some type of building and you think there's some energy efficient upgrades or something that has happened, definitely talk to a tax advisor on that line. If my work is at home, can I deduct a percentage? You absolutely can. So if you scroll back over, honey, to the other side of this form, keep going down right there. Line 30 is expenses for business use of your home. So I'm going to go very high level tonight, but next week, I think I have it. If you look at my show titles, I've broken down every section of this form. So we go over a small section each week. But if you work at home, you have two different ways, two different options of claiming that space. Your space has to be used primarily and exclusively for your business. So the easiest way for me to describe that is if you have a bedroom, a second bedroom or third bedroom that you never use for anything but whatnot, the square footage of that room is what you can deduct. But say you don't have the whole room, you have a guest bedroom that's infrequently used by guests. There's a bed in there in case someone needs to come and spend the night, but you use half of the room. You have shelves for your inventory, you film stuff there, you do your packing, whatever else. The square footage of the space you use. So you couldn't take the whole room, but you can take whatever you use primarily and exclusively for your business to deduct on your tax return. They allow you two ways to do this. Actual, where you're calculating that square footage, you're taking all the expenses that go into that. So your rent or parts of the mortgage, parts of the utilities that would affect that part of the house. And then you could take a percent. So if that square footage equals 5% of the total square footage of your house, 5% of all the direct expenses could be deducted. That's actual. But the IRS is like, you know what? That's a lot of work. We're going to give you an easy way. So there's a simplified version. The simplified home office deduction, off the top of my head, I can't remember the exact numbers. They're like, I think it's 300. They basically say, we're just going to give you 300 square feet. I don't care if you have 10 square feet. I don't care if you have 5,000 square feet. If you use simplified, we're just going to give you 300 at this dollar amount. Just take this deduction. That's pretty easy. And for most people, it works out just fine. Again, there's two different methods. Anytime the IRS gives you a choice, you always want to evaluate which one is the most beneficial to you. Now, a lot of times when they give you a choice, there's a rule that says whatever you pick first, you can't change. So whatever you do for the very first time you use it, your home office, your vehicle, you're stuck with it. So as you come into this as a new seller or the first time filing a tax return, you want to make sure you're making the right choice. What if I have a separate business expense, but I also have all of the decor listed in my house as inventory and do shows from my house? But you also live in your house. So this is where it gets really muddied waters. So I Love Discounts. Let's just picture you have your whole house and you have shelves around. You have all your gorgeous glass on shelves throughout your living room and maybe in some bedrooms. Maybe you have some really beautiful canisters or pottery up in your kitchen. And ultimately, all of this is listed on some website for sale, right? But you also live in your living room. You kick back and relax and watch TV in your living room. You eat in your kitchen. You cook in your kitchen. You sit at your dining room table. So those spaces aren't used primarily and exclusively for business. So what you need to do is figure out a square footage that's primarily and exclusively used. Or you take the simplified and just take their 300 square feet and be happy with it. I currently have an LLC, but want to start doing my reseller business as a sole proprietor. It has been making my taxes complex. Is being a sole proprietor. Okay, so Busy Bee, the question I would ask you, are you a single member LLC? Is that LLC only in your name or you and a spouse? If the answer is yes, single, then your taxes are no different than a sole proprietor. This is a misconception with LLCs. People think they get LLCs to have easier taxes or loopholes in taxes or more tax advantages. A single member LLC and a sole proprietor, guess what form they file? Both of them file Schedule C, that form we just went over. The same rules apply to both of them. So it's not going to make your tax situation easier unless you have some unique situation as a single member LLC, such as employees, owning certain property, certain growth plans, plans to sell someday, plans to have business partners. There's a multitude of different variables that would indicate having an LLC is a good thing. But in absence of a lot of those variables, an LLC most of the time is not necessary. It does to an extent. Do you keep annual records of your board of directors? Do you keep annual records? Do you keep completely separate books and accounting and bank accounts and credit cards from your personal assets? So these are questions that people don't consider when they have an LLC. You can have an LLC and people will say, oh, I've got an LLC to protect my assets. First of all, are you in a highly litigated industry? I don't know about you. I sell vintage on Whatnot. The odds of me being sued are like incredibly low. Okay. I'll get to, I see Kimmy's question. I'll get to Kimmy in 2 seconds here. I'm not ignoring you, Kimmy. Here's the thing. If you have an LLC, but you don't treat it as a true business there are so many ways that you can, what's called breaching the corporate veil. An LLC sets this veil up over your business, right? You have your personal stuff going over here and you have this veil to protect your personal assets, right? Anything you do that does not act in the sense of a true business, it breaches that veil and it creates this hole. That hole is where a lawyer is going to come in and attack all your personal assets, whether you have an LLC or not. So depending on what those assets are and what all these other variables are, and how you're operating, if you're not operating like a true structured legal entity, it is a separate entity, the LLC is useless. And I don't say that to be mean. It's such a misconception and it is really my soapbox thing because so many people are given misinformation and LLCs cost you money. You have to register every year at the state. You have extra just processes with the state, things to think about with the LLC. If you decide to go out of business, now you need to dissolve the LLC. There's so much more that's not always necessary. Okay, Kimmy, sorry, I wasn't ignoring you. Is it true that you are more likely to get audited if you start claiming parts of your home? Not true at all. Not true at all. No. Now, if you start to get ridiculous with it, if you start claiming I have a 10,000 square foot house and I use 999 square feet for my business and I'm going to write all that off. If you start getting ridiculous, 100%, it raises your odds. But if you're being honest and you're following the rules, it's not a red flag. So does 300 square feet include utility? No, it does include utilities. So the simplified method, that 300 square feet, is like, look, I'm not going to make you count all this other stuff. We're just going to give you 300 square feet at a certain dollar amount. I will have that dollar amount when we talk about it. I didn't look it up on what it was. It does fluctuate, usually goes up for inflation. But no, it's like this set thing. It's the IRS is like, look, I'm going to make this really simple. Check this box. Here's the number you can put in there. And that's what you get. All right. So we talked about assets, talked about the LLC. Just resell. I just got worried. What if someone kid chokes on a bead I sold on Whatnot and I get sued and I'm just a reseller? I mean, you could, there is always a chance of something, right? Again, I'm not going to say do it or don't do it. I'm going to give you, here's a lot of variables that you would consider. Here's reasons why you shouldn't. What I always say about an LLC, speak to a CPA, speak to a financial advisor. They are going to look at the big picture. They're going to look at a lot of those variables I talked about, in addition to what are your plans in the future, what are your financials look like. They're going to take all of this into consideration and give you a professional opinion based on all the unique facts and circumstances of your situation. We chose an LLC once we got employees. That's one of the variables. That's a really good reason to have an LLC. And a brick and mortar store that you could have slip and falls in a brick and mortar. Now you've gone in, when you go into a brick and mortar, your risk starts drastically increasing on ways that you may get sued. And food that came with a high possibility of litigation is one of those variables. How do you dissolve? With your state. It's as simple as you go to your state website. So where you created your LLC, go back to the same place. Usually it's like whatever state.gov, and it's in there somewhere. Every state's just a tad bit different, and there'll be a way to dissolve an LLC. You're very welcome. Let's see. Crystal says, it's not mean it needs to be said because too many people misunderstand the LLC thing. I was told an LLC is the only way to have tax exemptions. Okay, Jay, I am so sorry for whoever told you that, because if you were a single member LLC, you have the exact same tax exemptions as a sole proprietor. So, and that's the type of misinformation that's out there that drives me insane as a CPA. It's people not qualified to give information and they give it. Does an LLC increase taxes in some way versus no, not at all. And I'm talking a single member LLC is just like a sole proprietor. It flows through the same way. That net income on your net profit, that bottom line on your Schedule C, that's what you're taxed on. That's what your self-employment tax is calculated and your federal tax is calculated on. And it doesn't matter if you're a single member LLC or sole proprietor, that tax is calculated the exact same way in the same tax brackets on how it fits into your personal return. There is zero difference. Now, when you start getting to a certain income level and you start paying payroll, and comes a point where it does make a sense to possibly get an LLC and do an S election. There is some trade-off at a certain point, but that's really dependent on so many different variables that unless it's a CPA or a tax advisor or like a financial advisor that you sit with and they know all these variables, nobody can adequately make that decision for you. Or unless you take it upon yourself to really look at all of the variables yourself and do a ton of research to make an educated decision. All right. We've been talking for a while. Let's see. Do you claim internet and cell phone usage for shows? I know we use this all the time, but it's impossible for me to calculate. So, B. Haynes, the way to calculate this, so internet and cell phone, yes, on both of those. So but you do it by the business percent. So your business use of that, because your cell phone, if you only have one, you're probably using it for personal stuff too. You probably use it to scroll the internet, to call your best friend, whatever else, right? It's not solely business, but there is a business component. So you can look at the different apps on an iPhone. You can see your usage on certain apps. It can say you used it for so many hours. That's a way to get an idea on what percent is business use. It's up to you to determine the percent of business use. And then when you do that, you need to document it and file that with your tax return. And the reason I say that is if the IRS ever comes back and asks you, well, how did you determine that How did you determine that you use your phone 60% of the time for business? You can pull that paper out and say, this is how I determine, because I do shows on these days of the week. I looked at my usage said this. So just protect yourself by documenting that. Same thing for the internet. You do the same type of concept. What requires quarterly payments? Kimmy, estimated taxes require quarterly payments. If you plan to have $1,000 or more of tax liability than what you had last year, then you are required to pay that money in a timely manner to the IRS. You pay that money in either through quarterly taxes or if you have a W-2 job by increasing what's withheld on your 9-to-5 job. And the only way to know that is to, one, understand your last year's tax return, knowing what your tax liability was, and then two, keeping proper documentation, proper accounting now, so that you can plan and project what your income is going to be, so that each quarter you can have an estimated calculation if your tax liability is going to be higher or not. If you do no bookkeeping throughout the year and you get to January and realize, oh my goodness, I made a lot more money and I'm going to owe a lot more tax, well, guess what? Now you've paid it late and you'll be penalized for it. I was in a show today and someone asked the seller if they should file as an LLC and he said yes. Oh, that just breaks my heart. I know, I hear it all the time too. And it's not just people on Whatnot. It's if you go on QuickBooks, if you go on like these any of these business websites, accounting websites, and you'll see it pop up all the time. Let us help you file your LLC. Not like here's a list of considerations you might want to think about. It's just straight to go file your LLC. You don't happen to be a CPA on the side, just a little bit. I am a CPA. If you didn't know, if you're new to me, thank you for being here. My name's Tracy. I am a CPA. I'm licensed in 2 states, the state of Maryland and Pennsylvania. I used to be licensed in Florida and Georgia, but I no longer practice there, so I don't have licenses in those states anymore. And I am a CPA. I have worked in accounting my whole career, so I have over 30 years of experience. Do you have a chart with all the details? A chart on details for what? I am not sure when you typed that, what I was talking about when you typed that. So I'm going to have to ask you to clarify. I'm sorry. Percentage of internet and cell, would that go under utilities or expense? I would put that under utilities. That's where I would classify as under utilities. Can you point me in the right direction on selling a Whatnot and being on disability? So there is nothing different about Whatnot. I'm assuming when you say disability, I'm assuming you have some type of Social Security disability income. There's a whole set of rules around that on how much money you can make before it affects your Social Security disability income. Whether that money is made on Whatnot, driving for Uber, working for somebody else, it's the same set of rules for Social Security disability. I am not super familiar with what those income limitations are, but I think a pretty quick Google search or go to the Social Security website, that's where I would go. I like to go straight to the source of information. And they probably have some type of chart that tells you if you're single or married or the various things on how much money you're allowed to make before it affects your income. So just because it's selling on Whatnot is no different than any other income. It really goes by the Social Security disability rules. And that I don't happen to be very experienced in. I can file a tax return with Social Security income, but I don't deal with the legalities of that. Yes, that's what happened to you. Okay, I just started selling in 2025. Congratulations. Welcome to Whatnot. I did not pay estimated taxes. Do you mean I will get penalized? It depends, B. Haynes. It depends on, is your tax liability. So there is a line on your 1040. Your 1040 is your personal tax return. There is a line that says total tax liability. That's the number that you owe the government, okay? Then underneath that line is where you put all the payments you made to the government, which if you had money withheld on your W-2, that goes there. If you made any other payments in any way, that goes there. And then at the end, it says, oh, you overpaid, you get a refund, or you didn't pay enough, you owe us a little bit more, okay? You don't want to look at the refund or the amount due at the bottom of it. You want to look at the line that says total tax liability. Once you see that number, if you expect your total tax liability this year to be $1,000 or more than what it was last year, the IRS asks that you send that money in on a timely manner throughout the year. So it really comes back to, what do you project your income to be this year? What do you project your deductions to be? And it's income, when we're talking income, it's net income. So on your Schedule C, that form we were just looking at, you take your revenue, you take your cost of goods, you take out all those expenses we just talked about, and what's left at the bottom? What's that net profit? Add that net profit. So you look at that. If that's going to create a tax liability greater than $1,000, you may owe money, yes. Or you may not. It really kind of depends what else is happening in your tax return. And you don't have to tell me. I'm not trying to be personal, but you have to look at everything else that's happening. Are you married? Does your spouse have income? Do you have kids? Do you have a Schedule A? So there's all these other things, and everybody has a different situation going on that you have to look at to figure out what that liability is going to be. Oh, what goes under what? Linda, I'm not sure what you're asking. I missed it. So if I do a sole proprietor, the whatnot income just is added to my other income and taxed altogether. Busy Bee, yes and no. Your whatnot income is reported on the Schedule C. If you have other reselling income, you do Etsy, eBay, whatever it is, all of that income goes on the same Schedule C. If you have a job also, if you have a W-2 job, that income gets reported on your 1040. That doesn't go on your Schedule C. But ultimately, your Schedule C, that net income at the bottom, that net profit amount, that number gets transferred over to your 1040 as part of your personal income and added to your W-2 income, and all the taxes calculated. Your withholding tax is calculated off of that. State required quarterly taxes for my LLC. I never made any money. I lost money, ended up paying late charges. Yeah. And my comptroller charged me. I'm telling you, LLCs are no joke. There's a lot of legal requirements that come with them, and people aren't prepared for them. Would they count your gross income for that or your profit on the disability? It would be your net profit. If you're looking at a Schedule C, it would be your net profit. If you're a W-2 employee, it would be your gross income for your what counts against your Social Security. Thank you. I love discounts. Oh, thank you so much, Busy Bee. Wow, we've been on here. Wow, I've been talking for a while. Time just flew by. See how time just flies when you're having fun. This is fun to me. I know I'm a geek. If you guys have any more questions, I'm happy to answer them. If not, I've got to go take some pictures to get some stuff listed tonight. Where do we put whatnot fees and credit card processing fees? Those, I would put all of those under just other. So that's the one line we didn't look at. Can you pull up the Schedule C really quick? So right there, 27B, this says other expenses from line 48. So if we go to line 48 is pretty much a bunch of blank lines. It should be on page 2. Right there. That's line 48 right there. See where it says other, go scroll up so we can see the title. Yes, but let's see the title of it. Keep going right there. Part 5, other expenses, and there's a bunch of blank lines. So if you looked at all that expense section and you filled out all that expense section that we just went over, and you're like, well, but I've got all these expenses and they didn't quite fit into these nice little neat boxes on page 1. You list them here. Education expenses. There's no place for educational material under expenses. So I would list educational material here. Anything, this is for any other expenses that just doesn't fit on those boxes on page 1. You list them here. It goes to line 48 and then goes back and you deduct it. If I started a business this year, but the product that I'm using this year was bought several years before, can I still use? Absolutely. That's just an asset in your business, Kimmy. Absolutely. That's the basis. That's your cost of goods right there. Whatever you paid for it, those receipts, that creates your inventory right now. 100%. So, all right, you guys. We're going to go raid. I'm going to be back next Friday. Sorry, it's okay. Sorry, my comptroller changed the spelling. Do you have a detailed list of, oh, your computer changed it. Do you have a detailed list of what goes under line 1 to 29? Go to, I wish I did not write the publication down. The best way to get a list is go to www.irs.gov. And then in their search bar, they have a little search bar, put Schedule C. That's going to bring up a whole list of things. And at the very top of that list, it's going to say Schedule C instructions and Schedule C form. If you click on Schedule C instructions, it's okay. Don't be scared of it. If you click on Schedule C instructions, that instruction booklet literally goes line by line by line by line. Okay, so Schedule C, and then, all right, so hit enter and let's see what comes up. And keep going. So that's just about it. If we go down here, there's the form right there. Instructions for Schedule C. So if you open that up, it's a PDF. And it will tell you line by line by line. It's going to give you a bunch of blah, blah, blah information at the front. But then right here, if you zoom in or go back up right there, just zoom in anywhere and scroll over, go down a bit, go down, keep going down, keep going right there. It's going to tell you line by line by line how to fill out each line. Okay. And it tells you what qualifies, what doesn't qualify. A lot of my notes tonight came straight from this schedule, from those instructions. Okay. It is on YouTube. Just about 99% of everything we do is on YouTube. So you never have to buy anything. And it's the same name, Zoe's Treasures, on YouTube. My hubby is helping me. My hubby is my cameraman and my graphics guy. And he pulls up all those forms and everything for us to look at. So 2 Schedule Cs for my husband's business and mine. DC Campbell, quite possibly. If you guys have different businesses, 100%. You just each file your Schedule C. They're both attached to your 1040. They both flow to your 1040. And it's nice and easy. Thank you, guys. I appreciate you being here. It would be really boring for me just to sit here and talk to myself because I work from home and I do that all day long. So I really enjoy coming and being able to talk to you guys. So with that, I'm going to go raid. I will be back next Friday night and on Friday mornings. If you guys aren't aware, thank you, Natural State of High. On Friday mornings, I do 2 hours. I do a business and kind of a tax topic. They're preset topics, but we also take questions there and we have a good time. We talk about a lot of stuff. So with that, I will see y'all later. Y'all have a really good weekend. Oh, my husband says, look at Ledger to Leadership. This is the accounting course. So I teach an accounting course on Whatnot, 6:30 Monday nights. And let's go see. Oh, we got to go to a Reworker's Passion. I haven't rated into her in forever.
Have a good week.